Welcome to a Now Explained Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explained Rough Cut. So now, let's get explaining. Customer Ledger Control Account, what it is and why we use it. What you need to be familiar with: source documents, daybooks, ledger cards, general ledger, customer ledger cards, debits, credits. Other terminology you should understand: double entry bookkeeping, T account layout. A customer ledger control account is also known as a debtors control account, sales control account, or accounts receivable control account. This control account is one method of calculating the total money owed to your business by your customers. It will calculate the overall total owed by all your customers. The individual customer ledger card balances, when added together, should come to the same balance total of the customer ledger control account. Control accounts use the values taken from the total columns of the daybooks. Customer ledger cards take the individual sales invoices, sales credit notes, and customer bank receipts from the daybooks. How do you know if the total of the debtors list is correct? How do you know if all the customers are on this debtors list? The control account is our double check. The debtor or customer control account general ledger balance is the value that will appear on your trial balance and other financial statements. Creating the customer ledger control account. Instead of posting all the individual customer transactions which are posted to each individual customer's ledger cards, we instead post the totals of the daybooks to the debtors control account. The total of all sales invoices from the daybook, the total of all sales credit notes from the daybook, and the total of all customer, the debtor, receipts from the daybook. From this we can calculate the total of all the customers added together. The control we are doing is checking that the individual transactions add up to the totals. The control account takes the totals from the daybooks and calculates a balance. The individual ledger cards take the individual transactions from the daybooks. The control account ensures that all the individual transactions have been recorded on a customer ledger card. If one gets omitted, then the customer's listing will be wrong and won't agree with the control account. Here is a customer control account calculation. Here is each daybook showing just the totals for the month. The individual transactions have been removed. So here's the €630 from the total column of the sales invoice daybook, the €123 from the sales credit note daybook, and the total from the customers column on the bank receipts daybook. On the next slide, we will see how all these totals are used and also see how the individual transactions link to the overall totals. Here are the completed customer ledger cards. Let's step through each individual transaction and see how the overall daybook totals are then used in the control account. So let's look at the invoices. So here's our first invoice, €75. The second invoice, another €75. The third invoice, €141. The fourth invoice, $153, and that fifth invoice for $186. So each individual invoice, when added together, comes to €630. So in our daybook we have €630 in the total column, and that's what gets posted to the debtors control account. Now let's look at the credit notes and where they came from. Here's our first credit note for €75, and here's our second credit note for €48. So from our daybook, the sales credit note daybook, €123 is in the total column, and this is what gets posted to the debtors control account. Now let's look finally at the customer receipts. So in this case we have €75 and then €153. So the total in our customer receipts in our bank receipts daybook is €228. And this total amount taken from the bank receipts debtors column is €228. From this we can calculate the total of all the customers added together. So we get €279. So the total of the totals should equal the total of all the individual transactions. The total of all the individual customer balances on their ledger cards should equal the total of the customer ledger control account. So on our list of customers, we get €279 from those ledger cards. The debtors control account balance agrees to the customer balance listing. We approve that all the individual customer related transactions have been recorded on the individual ledger cards. This has been an explanation of customer ledger control accounts used in bookkeeping and accounting. In a manual bookkeeping system, the customer control accounts have the total values from the sales invoice daybook, sales credit note daybook, and bank receipts daybook columns posted to them. These daybooks are set up to record line items and then totals to allow easy posting to the control accounts. The debtors control account is used as a double check to the manual process of listing customer ledger balances, ensuring the business knows how much money it is owed. This control account is part of the double entry bookkeeping system. For more information, go to nowexplained.com. Thank you for watching.